Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Parsati, and the new 10-year Gsec yield is rising sharply. On Friday, the new 10-year bond cutoff came in at 6.54%, and even at these higher levels, which is a 2-year high, RBI had to give 42% of the auction to underwriters. And now all the underwriters who are holding the bonds are selling the bonds at whatever yield they can, and the yield has risen to 6.62%, and looking to rise up as the markets are fearing the budget which is coming up on the 1st of February for fiscal 22-23. And in the budget, the government seems to have indicated that it will be pretty a popular budget, largely because of the elections that are coming up in the next couple of years, and also to keep the economy momentum going, given that a new wave is hitting the new COVID wave is hitting the economy, and also to make sure that there is enough momentum in the economy, which has gained substantial traction over the last 2 years despite COVID. And with all this, RBI has been very supportive with yields, with keeping interest rates at extremely low levels, and brought it down to record highs. And also, they have been trying to protect the 10-year government bond yield, terming it as a public good. But the protection has clearly only made investors buy bonds at lower levels. So we saw the 10-year bond, a couple of years back, was issued at 5.77%, the lowest to the 2030 bond. And then it's the latest bond, 2032 bond, the 6.54% is again the yields are rising. So bond yields are rising very sharply on worries about budget, and indications are subsidies for fertilizers will be increased, and many other subsidies increased given that oil prices are also higher, and the government will have to make sure that inflation is not already, which is very high, is not going to rise much further, given that with interest rates so low, high inflation eats into returns for the savers. With all this, clearly the bond markets are worried about where the budget is going to take them. So much of borrowing is coming in, supply is coming in, and with inflation pressures and also Fed looking to raise rates, all these factors are contributing to sharp rise in yields. In other areas, U.S. Treasury yields almost steady at higher levels, 1.78%, while the Sensex, Nifty and the INR ended steady. A populist budget is largely positive for the Sensex Nifty as it improves demand in the economy, and the rupee too tends to react if there is higher yields, interest rates in the economy as against the rest of the world, and capital flows into higher yielding Indian rupee. Thank you for listening in, and we are very, very pleased to announce the launch of our Quick Invest app, Quick Invest from INR bonds. Download the app on iOS and Android users. This app enables you to invest in the bonds in the easiest way possible. We have a curated list of bonds for you with all the details provided, and all you need to do is just make sure that you identify the bond you want to invest in, and it will take you through a very, very seamless investment process. So the download links are there in the description below, and please download the INR bonds, Quick Invest from INR bonds. And if you're not subscribed to our YouTube channel, please do so.